From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello on this Friday afternoon. It is the 9th of August. Welcome to the COB.
And cheers to you, Nadine Blaney. I'm Juliette Sarli. What a wild week. We have deserved this, as have you, if you have held your hat and your calm amidst this incredibly volatile week. Because, you know, a week ago, we would not have seen what was coming, but we're kind of close to where we were a week ago.
It is incredible, isn't it? And I'm reminded by this because I was getting ready for our weekend newsletter. If you don't subscribe, you should. It's called Off the Clock. We just put together some of the best interviews of the week along some of the main thematics. And Raymond Chan from Morgans, I spoke with him on Monday when everything was melting down, and he said, keep calm, carry on, think about the fair value of the market, which he reckons sits at 7,400. So that's lower than we are today. So you can check that interview out up online or in the weekend newsy.
Indeed, and it was kind of about a 10% drop from where we were before the sell-off as well, is kind of what he was saying. And that is a correction. 10% is a correction. All right, let's have a look at where we are at this Friday. 1.4% on the CBO 200. The ASX 200 is firmer by 1.3%, 7,782.
Yeah, so when you look around and you consider still what's to come, I mean, it was fairly positive, generally speaking, around the region today. And we don't have any huge data on the horizon as far as the US goes. We did have that jobless claims, which does point to further slowing in the jobs market, but didn't seem to spook the horses, at least not today. And we'll be keeping our eye on those US futures, slightly negative as we close out the session here in Sydney.
Yeah, and that brings us to just, I guess, the themes. We're ending on a high. We have had a lot of volatility. I mean, I wasn't in the office on Monday, but I imagine it was quite traumatic.
Yeah, it was. You're looking at what's happening with the Nikkei and the Hang Seng. I know you had it on Friday, but it was just sort of, what are we in for here? Still down, though, by about 2% for the week, but nice to see up 1.3% on this Friday. And China, I was reading a note from CBA.
Yeah.
Because we have seen iron ore slip below that $100 per wet metric ton for the second day in a row, but just saying that they are expecting still to see stimulus coming through in the fourth quarter as China looks to defend that 5% growth target.
Yeah, absolutely. And CPI rising more than expected in July, mainly due to a lot of seasonal factors like weather. But of course, there's still a lot of concern about domestic demand. We get the big monthly data dump next week and also potential change to the one-year MLF.
Yep. But also next week, huge week when it comes to reporting season. So things are really heating up. We'll get you across what you need to know. Of course, keep us on and keep checking in.
And also not just reporting season, we've got RBNZ next week. We've got wage price index locally, the jobs report.
It's jobs next week.
Jobs is next week. So
that's really
a lot
big
happening.
Because in the wake of the RBA meeting, which again was this week, it feels like a long time ago now. The guests that I was speaking to just saying that it's the jobs read now from here on in. Yes, inflation, but we know inflation has proved sticky, and the RBA did revise up its inflation forecast. It's jobs. It's once we start to see jobs sort of worsening or, remaining quite strong in historical context, that will be the next determinant for the RBA.
Yeah, all right, let's have a look at some of the sectors. I spoke to the CEO of Life 360. CFO, excuse me. I just got caught up by the fact that it's not on that board, but we will get to it in a moment. But WiseTech Global was having a good day, Xero up 3.5%.
Yeah, tech looked really nice today. Life 360, by the way, was stock of the day, if you'd like to stick around to hear what our guests had to say. Other than that, we saw some good gains being made in the energy names as well, up by 2% for Santos. For those of you listening in podcast form, Beach Energy was up by 2.9%. Even in the smaller end, Strike putting on 1.4%.
And having a look at some of the big miners today is certainly a nice day for those. A rebound from Rio Tinto up 2.4%, BHP up by about 1.7%.
So REITs had a great chat on today's episode of The Call about Charter Hall. Charter Hall sort of inspired the conversation, but Jonathan Takadina from MPC Markets talked about how they have really strategized with puts around the REITs to gain upside for their clients. Charter Hall having a good day today, up by 2.7%. The Long Whale REIT reported yesterday. Goodman Group, that was named by Jonathan Takadina. And actually, I think it was maybe it was Adam Dawes about a company that he'd love to, if there is another pullback, if there is another really down day where we see savage selling, Goodman Group is on his watch list.
Yeah, he was on fire today, also having a go at trying to be an anchor in the ad break. Let's have a look at some of the top stories, and of course News Corp among the top gainers on news it plans to sell Foxtel and coming through with its earnings numbers as well.
Yeah, by 8%. There's your Life 360, solid 17%. You can listen to the CFO. He knows the numbers. Revenue guidance was upgraded. Those global expansion plans continuing. I guess QB was sort of the exception to the rule when it came to what we saw today coming from these reports, undershooting profit and guidance. So yeah, disappointed.
Yeah, and REA Group there, of course, which is a subsidiary of News Corp, rising too by 6.3%. They've seen residential listings rise 7%, and that's really being driven by what we're seeing in Sydney and Melbourne.
Nick Scali, let's not forget the retailers. This is an interesting one. Slumped after full year profits slipped close to 19% from a year ago. And Nick Scali has rarely put a foot wrong. So that's, maybe a canary in the coal mine. But the market not treating it too severely, down by just 0.1%.
All right, let's get to our guest. Shane Oliver from AMP joins us. And Shane, it was interesting. I was reading your commentary after the RBA left rates on hold, and you still indicated you think that there is a need for a cut. Listening to Michelle Bullock twice this week, seems like she's not listening to you.
Well, she doesn't have to. I guess the RBA will form their own views on these things. There's often differences of opinion there. If you go back to 2022, earlier on, I was thinking the RBA should be hiking, and the Reserve Bank was saying, well, no, they shouldn't. I've been too beyond that through much of last year. I was too dovish, if you like, and the RBA turned out to be right. Well, we don't know. We don't know completely yet because things haven't fully played out. But I guess my view on economics, the economic outlook is slightly different to the Reserve Bank's. I think the economic outlook is a little bit weaker than the Reserve Bank is forecasting. I don't see growth picking up like they're implying. I think the consumer is struggling a lot more, and I think we've seen results in the last week that are consistent with that. Not that there's been that many so far. Meyer yesterday, and then of course Nick Scali today, warning that conditions in the retail sector and the consumer is still struggling. And I think given that backdrop, the more likely scenario is that inflation will fall a little bit faster than the Reserve is allowing for, and therefore, there is a case to consider cutting interest rates. That said, I have to accept reality here. The Reserve Bank sets rates, not me. And they're telling us it's still a fair way off. Their guidance has been wrong a few times in the past, so you've got to be a little bit cautious about reading too much into that. It's not ironclad, but unless we get some sort of economic or financial shock before November, say, or December, then the next cut is going to be next year, not late this year. So for the time being, we're sticking to our view that it's going to be February before they cut, not November or December.
Okay, look, we could all shoulda, woulda, coulda with the RBA. Michelle Bullock this week at her media conference said, I wish I had the certainty of some of these commentators. Don't think she was talking to you.
She wasn't talking about you, Shane.
Or us, but anyways.
Well, she might have been.
But let's talk markets, shall we? Because, it was a pretty bad start to the week. Obviously, we're ending with plenty of green on the screen, but what have we learned? Like, what do we know now about global market sentiment and momentum?
Well, I guess we know several things. One is that markets had run very hard, such that a lot of positions had been built up. And when they unwind, you can get quite a sharp fall. I mean, there's nothing in that to indicate that it's any more than a correction within a still rising trend, though. But by the same token, we also know we started to see similar things going into the GFC. If you think back to August 2007, where you saw a sharp fall in markets. And then, of course, by the end of the month, I think the market was okay. Mind you, this fall, 3.7% Monday, 2% or whatever it was on the Friday, down 5.7% from the high is a non-event. Or it's not that unusual in the great scheme of things, nor is the 9% or so fall that we saw in global shares and US shares from their highs in July. These things happen every so often. But I think the broader issue is in relation to the US economy, and that is we've been going through a long period where everyone's been surprised at how resilient things are. but the forward indicators have been weakening. The yield curve's been negative for 2 years now. The leading indicators out of the US produced by the Conference Board have had falls consistent with what in the past have turned out to be recessions. Labour market leading indicators, job openings, hiring rates, quits rates, all of those things have been slowing. And now we're starting to see more evidence that that's showing up in unemployment. So I think the risks are still high that the US could have a recession. And therefore, I'd have to say that this bounce we're seeing could just be a bounce. We could still have more downside in markets. We are in a seasonally weak period of the year. It's unusual for markets to bottom in August. Usually a little bit later. There's a long way to go in the US election. There's issues in the Middle East. Is Iran going to retaliate against Israel or not? So all of these things suggest that, we could see more downside before this correction, or whatever you want to call it, is over.
Yeah, and I guess that just gets to the thought of how our economy is faring too. We'll get some more indicators next week with labour data and the wage price index.
That's right. This past week has been relatively quiet. What would have been, were it not for the RBA and, of course, Monday's little fall out of bed. I'm sure that was just to annoy people like me who were trying to have a quiet bank holiday. But anyway, that's what happened. But on the data front, it's been a pretty quiet week. Only second order stuff. I think the Melbourne Institute's inflation index, which mind you is going the right way, it's going down, and job ads, which for workers is going the wrong way, but for economists who want to see slower conditions, it's going the right way. It's also going down. But next week, things hot up. We do get that wage price index. It comes out once a quarter. It's for the June quarter. We think it'll probably be on the softer side, 0.9, 0.8, 0.9, which gives you about 3.9% or so. I think the consensus is 4%. That'll be a little dip down and provide confidence that we've probably seen the peak in terms of wages growth. And of course, then when we get to the September quarter, we'll see the slower national wage case increase go through, which will also lead to a further fall in wages growth. So that's out on Tuesday. And then on Thursday, we've got the jobs figures. I regard them as a bit of a lottery. It could be all over the place. Odds are we'll probably get a bit of a rise, but a lot slower than what we've seen over the last couple of months. And unemployment, so we're looking for a rise of about 15,000. I think the market is about 20. Unemployment probably staying at 4.1%. I guess a surprise would be consistent with the US, given that we've been sort of tracking along the US on the jobs data. They bottomed at 3.4. We were 3.5. They'd gone up to 4.1 in June. So would we. Then they went up to 4.3. I guess a risk is that we see an increase, but we haven't had a Hurricane Beryl or those sorts of things. So maybe we won't. But I think the broad trend in the unemployment rate is going to be up, and probably up a little bit more than I think the 4.4% peak that the RBA sees.
Shane, you told me a week ago that you would have loved to have been an Olympian if the timing was right in your life. You're obviously still watching. I mean, amazing. Our best Olympics ever. And also, one of our producers pointed out to me, 50-50 gender parity for the first time.
Yeah, and the women are killing it.
Yeah.
Yeah, it's awesome.
It is awesome, and it's awesome to see the way they all support each other. This is a fantastic Olympics for Australia. Economists like to look at these things in different ways. You look at medals per GDP, and Australia is shooting the lights out on that front. If you look at medals per person, we're shooting the lights out. Now, I'm sure someone will point out that there's a little country out there like Jamaica or New Zealand. They're normally the ones that do it. Kick in, they just get one extra medal and they kick in ahead of us. But if you compare ourselves to the top 10, particularly the US and China, we are doing spectacularly well. And obviously that is a testament to the fact that, when Australians put their minds towards something, and we've certainly done that in relation to sport, then we can do very, very well. So I must say it is a feel-good moment for Australians. I guess the obvious question is this going to rub over to the economy? Well, I don't think so. I think it'll be about as fleeting as Taylor Swift's visit was back in, was that February?
February, seems so long ago.
But maybe the Brisbane Olympics, let's hold out hopes for that and some deal making on the sidelines of the Brizzy Olympics. But yeah, Arissa True, that young skateboarder, youngest ever to win a gold medal. I loved showing my two little girls that win. And all the support that you're seeing amongst the Olympians is really heartwarming. Also warm, 18 degrees, I read, outside of our studios here in Sydney, so we better let you go enjoy it. Shane, make up for that bank holiday Monday that got rained on.
it got rained on by at Wall Street,
Yeah.
and then panic here. They fall out of bed, and on the Monday we seem to fall out of bed even worse.
Yeah.
Because we don't know how they're going to react the next day or overnight, and so that often accentuates the weakness that we see.
Yeah, what do they say? Wall Street sneezes, we catch a cold. All right, Shane,
We catch the cold, yeah.
have a great weekend.
Have a great weekend. See you soon.
Okay, you too.
And
See ya.
of course, Live 360, you spoke on
Yeah.
the call today.
So that was the stock of the day. We pick one every day. You can find all of them. We've got a library of them up on our website. But Adam Dawes and Jonathan Takadina were in the hot seat today. Here's what they had to say.
Definitely a buy. I've said that sort of last time I was on the show and talked about this one, and I think the biggest thing that you've got to look at this one is the 70 million subscriber base that this company has now, and that's just ridiculous. And they're just adding more new customers on a regular basis as well. You did mention that revenue of 84.9 million, but it's also wise to mention that the market was looking for around about 84.6 million. So that was actually a beat on the revenue line.
Obviously, it's expensive because it's a tech company, but when you're trying to establish a marketplace or the network effect, the cost of doing that is immense, and that's quite reasonable here. I looked at the rankings. I think it's like the top 5 in terms of social apps in the US, top 13 of apps overall. So it's cemented there as like the go-to marketplace. So, as you said, there's nothing to not like here.
That's a double buy.
Yeah, double buy on Life 360 and a great interview. I'm not saying that because I did it, but I just mean he was very giving with his answers.
That's a good
the
individual.
CFO.
Don't be modest.
All right, let's have a look at the after close winners.
Well,
Which one's Life 360?
And I was just going to add on to that because, of course, the comment is it's expensive. Look, it's just put on another 17% today, but both of my guests say, particularly when it comes to the Aussie market and tech, you've got to pay up for quality. So yes, it's expensive, but Jonathan was saying, great companies just get more expensive. So that's why it was a double buy today. Otherwise, you can see we've got News Corp, we've got REA, both on the list, and West African Resources making up some of the lost ground from earlier in the week. It's up by 6%.
Yeah, having a look at some of the laggards today. Neuron Pharmaceuticals, it did come through with an update on one of its trials. Lash and Wonder, also one that had reported earlier in the week, down 3.5%. QBE Insurance on its earnings, Nanosonics and Reliance Worldwide.
Yeah, Reliance has just put out its annual general meeting date, and I was just talking to the company about potentially getting them on at reporting season. Has seen recently its price target cut by 9% by UBS. That was yesterday.
All right, in the small end of town, having a look at some of the front runners, Energy Resources, Black Cat Syndicate, and PYC Therapeutics.
Yeah, okay, let's take a look at some of the laggards in that small to mid-cap space as well. Experience Co. off by 10%. Adair's down by 4.25%. I didn't see any news with that, but I'll look into when they're reporting. I don't know, I think I'll put off buying towels, I suppose, until the cost of living comes down. We'll see. A lot of people stocked up during COVID.
All right, coming through tonight, the unemployment rate in Canada and in the US, some earnings from Canopy Growth and Nikola.
Yeah, it seems a bit quieter through the night tonight when it comes to earnings. But we did just mention with our guest, Shane Oliver, that we do have a busy week next week. We get a speech from Deputy Reserve Governor Andrew Hauser. So it'll be interesting to see what he talks about because this is the new guy from England. And so he sort of went his own way in his last big public speech as far as spicing things up a little bit as far as title goes. So we don't see that often. We've got employment data coming on Thursday, which will sort of be the crescendo on the data front at least.
Yeah, and a lot of earnings. So JB Hi-Fi's on Monday. Telstra, I think, is Thursday. CBA is Wednesday, right? On Origin as well. So some big companies coming through next week.
Yeah, that's just scratching the surface of the companies. And we will be speaking with CBA CEO Matt Common come Wednesday in the wake of that earnings release. And it'll be really interesting to see what he has to say about what they're seeing in terms of the mortgages, the mortgage book, but also general economic reflections, because of course they're at the coalface. Like they've got so much data on us, what we're spending, what we're doing. And I did note today CBA saying that we've pretty much run down all of the savings that we built up in COVID, so they'll be gone by the end of the year.
Same. All right, looking ahead to next week and the overseas front, CPI and PPI from the US, the RBNZ interest rate decision, a lot saying, look, they may cut, retail sales as well, and the big China July data dump.
Looking forward to it all. Look, we got to wind this up. It's been so nice to spend all of this week with you. Let's just quickly check in to see where the S&P ASX 200 has finished. I know people like us to vocalize that so they know where this market has ended. If you're out walking the dog, 7,777.7. That's odd.
Wow, that's amazing.
Yeah, up by 1.25%, still down by 2% on the week. But let's, Juliet, focus on the positive.
Indeed, and look at the market map, and QBE, Light and Wonder, really the only big laggards. There's a lot of green out there. So what a difference a week makes, what a difference a weekend makes. And if you're talking about making sure that you rest as well as play, we have a great interview on The Wealthy about that, financial burnout and making sure you take your rest time. So everybody do that, and we'll see you on Monday.
See you Monday.